Good Monday morning. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, as well as Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Morning.
Morning. All right. Taking a look at Bitcoin. Bitcoin doesn't care about the $1 trillion infrastructure bill holding up Congress right now. It does what it wants. And right now it wants to breach 45,000, head toward 46. Right now trading at 45,800. Bitcoin is up about 1.5% over the past 24 hours. And the CoinDesk Ether Price ETX Index, also Ether zooming above 3,000 now at 31.37. Ether slightly down about 0.1% of the past 24 hours. And the new DFX CoinDesk's DeFi Index is trading at 659. DeFi also charging ahead about 0.7%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. Lawrence, what is going on with the markets?
Yeah, I wish I knew. No, it's right now. It's kind of a weird situation. We have a lot of low volume, and yet we have all these big movements. And that's something I'm going to definitely have to ask some of our guests today. We're seeing a lot of big movements from wallet to wallet, and we're seeing some bullish positioning in terms of the curve and in terms of just the borrowing rate for leverage. So we're starting to see a little bit more bullish positioning, but at the same time, the volumes still aren't what you would expect given the current price movements and given some of the action that happened over the weekend with all these transfers happening from one wallet to another. So it's a very strange time.
Right. And while that is happening, we also have this $1 trillion infrastructure bill being debated in Congress, and there is a crypto provision in there that hopes to generate $28 billion in taxes from crypto investors. And it all hangs on the definition of a broker that many crypto advocates are concerned about. Emily, though, not really impacting the markets much.
It doesn't seem to be impacting the markets. I mean, markets in general don't like regulatory uncertainty. This is like peak regulatory uncertainty. We don't know what's going to happen with this bill, and crypto Twitter is kind of freaking out about it. But the markets just don't seem to be paying that much attention. So it's really interesting. I don't know why, and I don't know why the market would be up when it seems that we don't know what's going to happen with this infrastructure bill, and it actually doesn't look like it's going in a way that would be positive for the cryptocurrency industry. But the market just goes on. So
yeah. Well, one of our colleagues has been monitoring DC all weekend long. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk, the State of Crypto newsletter. Hello there, Nick. So, as I said, you've been monitoring. I've been checking your tweets all weekend long. What is going on with the latest update with these amendments? Where Congress is at? Do we even know what kind of direction this is headed?
Hey, good morning. So, yeah, it's been a long weekend. As of last night, the Senate conducted a number of procedural votes on the on the infrastructure bill. And basically what we're looking at right now is the version that was introduced late last Sunday night, so about a week ago. And that's the version that has the pretty broad definition of a broker. It doesn't explicitly call out, decentralized exchanges like an original draft version did, but it also doesn't explicitly carve out any specific entities like miners or validators that, the industry believes should not be qualified as a broker, but could get caught up in this definition. As of right now, the Senate has basically, decided to vote and debate on the, underlying the text, as we said, the version from a week ago, meaning that, they're not really considering amendments. It is possible, and there are some proponents who believe that, there's a small chance here that an amendment could be adopted through unanimous consent, meaning all 100 senators have to agree. And, if they do, then they could find some kind of compromise or otherwise vote on one of the existing amendments that would narrow the definition of a broker to, specifically exchanges and OTC desks and other types of trading platforms or entities that have the necessary information to comply. Barring that, though, it looks like, within the next 24 hours or so, the Senate will vote, and they'll vote to pass the infrastructure bill that they have before them, which, again, as we've said twice now, is the pretty broad definition.
So why did they knock out the amendments? What was the backroom situation that happened, or actually the procedural situation rather, that happened when they said, okay, we're not going to consider any amendment at all on this?
So, yeah, over the weekend, they were discussing this. The Senate first filed cloture on this on Thursday night, meaning they had Friday, Saturday, and most of Sunday to kind of, figure things out within themselves. And it seems that, there are really just a couple at the end, non-crypto issues that just held up the entire thing. There were senators who were holding up unanimous consent to proceed because they have concerns about how the bill's getting paid for. Originally, this infrastructure bill was presented as something that was fully paid for. Then the Congressional Budget Office published a review saying, it's going to lead to a $250 billion deficit over 10 years. And, it seems that concerned some senators, enough that they held up, trying to expedite any kind of movement on this. And so in the end, it seems like, Majority Leader Chuck Schumer just decided to proceed with the actual bill, as debate time expired, and, just go without the amendments.
Yeah, actually, Nick, I was just going to ask you a similar question. It seems like a lot of what's going on in Washington has nothing to do with crypto at all, which is not the impression you get from watching crypto Twitter, which gives the impression that like all of Washington is paralyzed trying to understand the difference between proof of work and proof of stake, right? So, I mean, I guess the question is like, what happens? Like, so this bill that the crypto industry is basically saying is like Armageddon for the crypto industry is probably going to pass in its original form. Like, what next?
Yeah, so after this, it does go to the House of Representatives, and they're in recess. They'll probably take this up in the fall, and even there, there's going to be probably a fight, not just on the crypto stuff, but there's various parties who are very not satisfied with different aspects of the bill. Whether that's how much goes towards climate change or how much goes towards certain other provisions. There's going to be there will probably be a fight just over the different aspects. And there is bipartisan opposition to the crypto provision within the House. Representatives Darren Soto, Ro Khanna, Ted Budd, Tom Emmer, they've all come out and said that they do not like how the crypto provision is currently worded. So there might well be a fight over that specific portion as well. And so this fall is going to be, the real, I'm not going to say it's going to be the real thing to watch out for because it's been a pretty crazy 2 weeks, but it'll be the next, major place to look. We're going to see if the Senate, if the House even brings this to a vote because, Democrats want the reconciliation bill that's going to follow in the Senate to be passed first. And so it's very possible that, this could get drawn out quite a bit. But, regardless, in, a month and a half, month or 2 months even, we're going to be looking at what the House is doing.
Right. Just quickly. So to just clarify, the crypto community is concerned about this definition of broker could rope in miners, node operators, validators, et cetera, people that wouldn't be traditionally considered as brokers. The Biden administration says, no, it doesn't do that. It's already quite clear who is a broker and who is not a broker. Is that, and do many people follow that line of thinking?
The argument I've seen has been, if that's the case, why not explicitly carve them out into legislation, or even at least provide some kind of legislative intent, perhaps through like a colloquy, meaning a kind of conversation on the Senate floor, where you can say, this is who's carved out, and here's who we're supposed to try to capture. And I think that's been one of the sticking points is that it's all well and good to say that you're not intending to cover all this, but if you're not willing to put it into the actual legislation, then are you sure you're meaning what you say? Right.
And the case here is that there will be no new taxes per se on the crypto community, but the concern is mass surveillance on crypto transactions. Is that also the case?
Right. Yeah. So to comply, a broker would need to have, KYC information, know your customer information on whoever receives the transactions, meaning, for an exchange, it's pretty easy. They have to collect this information anyway when someone signs up. But if you're a miner sending, your transactions to a pool or to like the network in general, you don't really have like a clear cut customer that you can collect KYC information for. So it would be difficult for some of these types of parties to comply at all, just because they can't collect this information.
Mm-hmm. Right. Nick, thank you so much for the update, and we'll sure be watching your developments as they come along. I was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Continuing on with the infrastructure bill conversation, FTX CEO Sam Bankman-Fried weighing in, saying the first thing that crypto had to do here was make sure that Washington was aware there was a provision in the bill that needed clarification. That was successful. Washington is well aware now. And then a following tweet, the goal here, make it clear that centralized U.S. person-facing crypto exchanges have to be filing 1099s, which makes sense. And then kick the can down the road on messier questions. And joining us now from Hong Kong is Sam Bankman-Fried, CEO of crypto exchange FTX, quant trading firm Alameda Research, and co-founder of Project Zero. Welcome to the show, Sam. First off the bat, I want to ask you, how does this bill affect your business, if at all?
Yeah, so, I think it will have implications for FTX US. I think that's pretty clear. And, we'll be filing 1099s. That I think that was clearly coming. That's not a surprise. And, it'll take a little bit of work on our end, but it shouldn't be too hard, all things considered. And so I think on the FTX US end, the impacts are pretty clear. And I think we're sort of already anticipating that was going to happen.
So Sam, you gave $5.2 million to Joe Biden's campaign. You're the second highest donor in 2020 besides Mike Bloomberg, who gave about $56 million. You called the White House. Have you picked up the phone? You have Joe's cell number and you say, "Hey, Joe, what's going on here, man?"
Not for a few days. No. In the end, that was I think that was mostly unrelated from work. And, I think I've sort of made my opinions known here on how I think that this bill should be structured. And I think that it leaves a lot to be desired in its current format. But frankly, I think Biden has a lot going on right now other than, responding to a phone call from me. Yeah,
but nonetheless, I mean, it affects your business. I mean, wouldn't you want to at least use some of the I mean, you're on everyone's radar, and at least in DC. So why not pick up the phone and give a buzz?
Yeah, again,
just asking.
Yeah, and I think I've made my opinion known. I've made sure that people are aware of what I think here. But in the end, this is sort of their decision to make. There are a lot of people from the crypto industry who are consulting on this with legislature, to make sure that people are informed about the issue at hand, and sort of understand. Understand sort of the need for clarification here on especially decentralized applications. But I think in the end, this is sort of, this is just a small piece from most people's perspective of a much larger infrastructure bill. This is a $1 trillion bill compared to a $30 billion, supposedly, piece of it. And, in the end, I think that it looks like the way this is headed is that clarification on this is going to be sacrificed in order to get the bill moving forward.
That makes sense. So, Sam, last time you were on the show, we were talking about your geographic priorities, and you said the U.S. was, your next big destination for global growth. Does this, if this bill passes in its current form, which it seems like it probably will at this point, does that give you pause at all? Does that give you any concern about making the U.S. a strategic priority?
This bill isn't going to affect us in particular that much. I think, again, FTX US is already going to be filing these. That's sort of not much of an update. Now, I think that for, if you're sort of building non-custodial wallet software, I do think that you would be looking for clarity here about exactly who this was meant to apply to. And I think, some of the amendments that were proposed would have given that clarity. But I think for us in particular, I don't expect this bill to have large impact. I do think it may have large impact in other parts of the crypto industry, though.
Sam, can you spell out a little bit like what this impact is for just like the person who's outside of the crypto industry? Because, I feel like we have this divide where you have crypto Twitter being like the sky is falling and then the rest of America being like whatever, So could you just like spell out like why this matters, like why Americans should even care, about the effect that this has on the crypto industry?
Yeah, totally. So, there's sort of one piece of this, which is the straightforward piece, which is that if there's Americans trading on a U.S. crypto exchange, then that exchange should, be reporting information to the IRS. That is true of, brokers in the U.S. right now. And that's why the sort of word broker is being employed here in the bill. It's to analogize to what, E-Trade would be doing, for instance. But the way this is worded, it would hit anyone, maybe, the worry is that it would hit anyone who plays any part in making any transfer happening in crypto. And that is just really broad. And as an example, one worry is, how about miners? How about blockchain validators, right? Are they getting consideration at gas fees or something, right? Like, are they facilitating a blockchain transfer? Yeah, they could be held to be. And so the worry is that this would actually go to anyone who's involved in DeFi in any way and say, hey, you have to go report all transfers with tax information KYC to the US government. And the thing, though, is that like most of the players in that process, they're like the internet service provider equivalent. Like, they're not the ones with the customer information. They're not the ones running the exchange. Like, they're just sort of transmitting information back and forth in like an impartial way. And, they don't even have the information that's, required here, let alone a duty to give it. And so they would be like unable to comply with this. And it'd be a really weird group of people to be asking to try and, provide information on transactions happening on a blockchain. They know nothing more than what like a third party would know here, because they're not actually the ones who are sort of like doing the trades, or even like hosting an account that does it.
Sam, to that note, my colleague Nick has a question saying that the industry argument is that miners, wallet providers, et cetera, can't be treated as brokers because they don't have the requisite customer KYC information to comply with broker-specific tax information reporting requirements. So is there another tax regulation that makes more sense if the goal here is to both regulate the industry and generate tax revenue?
Totally. And I think the first of all, the straightforward thing to do, I think, would just have a bill saying, look, centralized US facing exchanges have to be collecting this information and passing on to the government. Coinbase, FTX US, Gemini, Kraken, like, just say, first of all, that has to happen. That's clear. That's going to come into effect. And I think that's the first thing that should be passed. And I think to look, this isn't casting judgment on anyone else in crypto yet. Sort of, we'll deal with that later. And then you start to get to progressively messier questions, right? What if there's an offshore venue that has a U.S. taxpayer on it, right? What's the jurisdiction there? You start to get to like increasingly nuanced questions. And then you can look at, well, how about, in DeFi, right? How about a DEX? How about non-custodial wallet? How about a miner, a validator? How about someone who's trading on a DEX? Like, and I do think that some of these clearly shouldn't be, and other ones are more complicated. And I basically think that there needs to be like a longer conversation there. And many of these are going to have to be drawn, out of this language so that it doesn't apply to them. Maybe some of those ended up getting included, but that's a different conversation.
The Biden administration seems to think this is already clear, what's a broker and what's a non-broker. If this bill passes as is, do you think, you think it'll be quite messy?
Not clear. Yeah, or I mean, there's going to need to be clarification issued at some point on this. It just isn't clear right now. Now, there might be clarification issued. One thing we're hearing is that Treasury might itself just go out and say, hey, guys, we see this thing getting passed. Just so you know, here's how we interpret it. Now, I don't know what they're going to say if they say that. And so clarification doesn't need to come through a Senate amendment. There are lots of ways that clarity could come. I don't think it has come yet, though.
Sam, one thing for me personally that I think is missing from this puzzle, I think you articulated really well what the problems are with the bill, but again, it's about communicating this to the wider public, which is going to be necessary in the future if we want to get stuff done. So again, why should the average American care if mining leaves the United States? Why should the average American care if DEXs, can't comply with tax regulations? Like, I feel like if this is not more effectively communicated, these things aren't going to change. So what is the larger argument for people to actually have a stake in this outside of the crypto world?
Yeah, I think there's sort of like two prongs. This one, it just slows down innovation in general, right? People are trying to build technology, and now they're being, kicked out of the country. Is the worry for that? I'm not saying they would get kicked out, but that the worry is that the way this ends up getting implemented would be non-practical, and that just like hurts technological development. But the other thing it does is it just kicks a lot of these industries overseas, and so to the extent they don't shut down, it's just taking them out of the U.S. regulatory regime and maybe into other more hostile regimes towards the states, for that matter, right? And I think that, if you sort of said, look, this industry is going to exist in some form, would you like that to be under U.S. jurisdiction or not under U.S. jurisdiction? I think most people in the states would say, yeah, we want jurisdiction over that, and I think that what that means is having to play ball and, come up with reasonable regulations that take sort of a fair and balanced approach here, which I think some versions of this bill absolutely could. And in fact, many of the amendments I think would have brought it into that category. It looks like it's just getting too messy, frankly. And I don't think that these amendments are dying because they're sort of all deemed evil or anything like that. It was getting messy. People are having trouble coming to agreement on exactly what phrasing to have, and they just ran out of time. And now it's just time to pass the bill, and there failed to be a consensus before the deadline, and so I guess there's just no amendment. It's sort of how it's looking, which I think means that really the goal here should have been to try to come to an agreement as quickly as possible. Trying just to gum things up here, slow things down, to kill the bad amendments or focus on that. That's how this ends.
Sam, I got to ask, because Bitcoin's above 45,000. So I got to ask you a markets question. We're seeing a lot of movement from one wallet to another, 400 million, 500 million at a clip. Bitcoin's moving from one wallet to another. Volume's still relatively light. You guys took in about 200 or 300 million in Tether over the weekend, and USDC is flying around from one wallet to another as well. Yep. So what exactly is going on? Why are we seeing these big movements from wallet to wallet in a market with low volume?
It's a good question, frankly. It is the price increase is relatively high, given the volumes that we've seen. Now, one thing to take into account here is that it was a weekend. Weekends always have low volume and lower liquidity. And so you will see larger movements per dollar traded on weekends than you will on weekdays. That's part of this equation here, is just the weekend effect. But frankly, if you had put a gun to my head right on Friday and said, here's what's going to play out over the weekend in the Senate, Bitcoin up or down, I certainly would not have said that it's going to be pushing 46,000 at the end of this, right? I would have guessed a lot lower than that. So, whether this is just long planned inflows that happen to happen now, whether there's other information in the market that is unrelated to this and driving some of these moves, whether it's people taking off shorts or whatever, this has certainly, I think, been a surprisingly bullish price movement really continuously over the last week or so.
Is there any one exchange that you would say this is heavily involved in this?
It's not totally clear. So if you look across exchanges, you don't see one exchange with insanely high volume. It's not sort of you look and you're oh boy, that's where it's happening right there. That being said, right. I think FTX, there are a few signs that there's probably net buyers on FTX. I say this without having looked at private data about it at all. So don't take this as a read of what's going on, on the back end or anything, but just looking at things like the premium of the futures, which I think is a really good indicator of this, right? Right now, you can see that FTX is trading at a moderately higher premium, not massively, but a little bit higher than other exchanges. There are a few basis points, which tends to sort of point towards net buyers on that venue relative to sellers on others. So, from sort of an outside perspective, that wouldn't surprise me if that were happening. But again, what we haven't seen, you'll sometimes see incredibly strong inflows on one exchange. It'll be very noticeable. We have not seen that. And you can look at FTX's volume. maybe it's a little bit higher than average, but not massively so. Like, you certainly aren't seeing, the signs of like absolutely massive inflows coming into one venue in particular. This does seem to be substantially more spread out.
Well, Sam, we got to wrap it up there, but always love having you on and having you share your insights with us. So appreciate your time. Right, that was Sam Bankman-Fried, CEO of crypto exchange FTX, quant trading firm Alameda Research, and co-founder of Projects Europe. Coming up, checking in on Asia and the crypto markets update with Justin Solomon. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Justin Solomon of Forecast News.
Welcome to the daily forecast, August 9th, 2021. I'm Justin Solomon, filling in for editor-in-chief Angie Lau, covering all things blockchain. Coming up, Cardano's Alonzo Purple upgrade begins onboarding users. An Indian crypto exchange offers Bitcoin gift vouchers, and Axie Infinity hits $1 billion in trading volume. What's next? Let's get you up to speed from Asia to the world. First up, Alonzo Purple, the third and final step to Cardano's Alonzo upgrade, took place over the weekend as user onboarding has begun, and it's an important milestone for Cardano that brings smart contract capabilities to the network and makes it competitive with Ethereum and other protocols in the DeFi and dApp space, all expected by the end of the month. Forecast News' Lachlan Keller has more from Australia.
Hong Kong-based developer Input Output Hong Kong, or IOHK, announced the news that user onboarding to its testnet had begun in a 12-part Twitter thread. Alonzo Purple follows the blue and white stages. Alonzo White, which was launched in mid-July, also supported smart contracts, but only for a closed group of 500 users. Full support for smart contracts is expected to happen by the end of August or early September. Once the upgrade is complete, the network is even expected to support an ERC20 converter, allowing ETH tokens to run on the network. ADA, the native currency of the Cardano network, showed a moderate price improvement following the announcement, hovering at a high of almost $1.50 over the weekend before dropping slightly as the working week began. For Forecast News, I'm Lachlan Keller from Melbourne, Australia.
Meanwhile, fancy buying some gift vouchers with your crypto? That's what one India-based cryptocurrency exchange is allowing users to do with their Bitcoin. But as crypto applications expand commercially, there is still that nagging issue of whether legislators will ultimately let crypto survive. Forecast News' Monica Ghosh with the story from India.
UnoCoin is the first major crypto exchange to allow Indians to use Bitcoin for the purchase of everyday goods and services. Users will be able to buy vouchers valued at up to around $67 for use with well-known food, travel, and lifestyle retailers, including names such as Domino's Pizza, Cafe Coffee Day, Yatra.com, and kitchen appliances brand Prestige. UnoCoin told Forecast News it demonstrates to both consumers and the government that cryptocurrencies aren't just a speculative asset.
When it comes to the governments, right? So, we keep on speculating whether they will treat it like an asset or like a barterable value transfer system or what it is. But however, whatever we are trying to do here more is towards the utility of what this Bitcoin can be used for. Not just like you accumulate and you hold it, the value to go up, and then you try to sell it at profit.
India's crypto regulation bill was first listed on the parliamentary agenda during the winter season, but was never tabled and has now been postponed indefinitely. For Forecast News, I'm Monica Ghosh, Pune, India.
On Monday, Axie Infinity's founder announced their NFT market's trading volume became the first to hit $1 billion. That came hot on the heels of the announcement that they have more than 1 million daily active players just last Friday. According to data from dApp Radar, the Axie NFT market now has a trading volume of just over $1.1 billion, meaning it ranks first among all markets, with trading volume increasing over 200% in just the last 30 days. And data from Token Terminal shows the volume of the native token, AXS, has gained over 150% in that same time frame. If you're not familiar yet, Axie Infinity is a game inspired by Pokemon. Bundling financing and game playing, players obtain their electronic pet Axie by purchasing an NFT, then gain tokens through breeding, fighting, and selling advanced pet NFTs. Players can exchange their tokens for fiat currencies. It's part of a bigger trend. DeFi games are on the rise. According to game data analysis agency Investigame, 24 blockchain game companies completed a total of $476 million in financing in the first half of this year. Putting fiat to serious work in crypto, not just fun and games, I suppose. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Justin Solomon. Until next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Bitcoin gunning for 46,000. Let's take a live look. The CoinDesk Bitcoin price XBX index currently trading at 45,881. Bitcoin up about 2.4% over the past 24 hours. And the CoinDesk Ether price ETX index is at 3139, trading pretty flat for the day. And the new DFX CoinDesk's DeFi index is trading at 659. DeFi is up about 75 basis points over the past 24 hours. And here to get down to the bottom of this price-popping action is Teddy Fusaro, the president of Bitwise, a crypto index manager. Welcome, Teddy. So taking a look at Bitcoin, what is driving it up?
Christine, Lawrence, Emily, good to be back with you guys again. I just want to say off the top, great coverage over this weekend's happenings on the infrastructure bill. Thanks to Nick for being there and online all weekend covering it. You guys have really been on it. So the whole industry appreciates it. So thank you. In terms of what we're seeing in the market, yes, we haven't traded in this range since May. We're nearing 46,000 now. And I think historically, when we look at Bitcoin's price action, the rallies do tend to be short, sharp, and really exaggerated like this. And that's what we're seeing right now. It's been a few months now, about 3 months of somewhat sideways trade. And in particular, this is why when we talk to clients, our CIO, Matt Hogan at Bitwise, has done some really interesting research about the importance of rebalancing an exposure in a diversified portfolio so that you don't miss these moves. If you do decide to have an allocation to Bitcoin and crypto, that way you'll participate when these moves occur, and you can be in position to either take some off when there's a rally or add to your position when there's a pullback.
Teddy, good to see you again. I'm going to throw the same question I threw Sam to you, and that's this. We saw a lot of movement over the past few days, not just the weekend, of course, but also the previous week, from wallet to wallet, $500 million clips here and there of Bitcoin moving from one wallet to another, but we have low volume on these exchanges. So what exactly is going on? What's happening that exchanges and other whales are moving their crypto from one wallet to another, yet we're not seeing them go necessarily onto exchanges to be sold? We're not quite sure what's really happening. What do you suppose is happening? What are you hearing?
Yeah, interesting question that you have there, Lawrence. Listened into Sam's response as well. I think it can be really difficult, particularly in the short term, to sort of read the tea leaves on these stablecoin movements across exchanges. Two things that I would say, though, if a market maker is making sales of Bitcoin, they're going to need to, or if they're purchasing Bitcoin from sellers on the exchange, they're going to need to create stablecoin to deliver that out. If it's an exchange that is denominated in USDC or in USDT, they're going to need to increase that supply of the stablecoin in order to make their settlement. That's one dynamic. Another dynamic is that it was a weekend. And in general, as arbitrage opportunities pop up across exchanges for these market-making firms, they need stable coin to be able to move them quickly from one venue to the other. So as activity rises, we do tend to see these dynamics, increased movement of assets, increased movement in stable coins, and that's how it kind of balances out across exchanges. I do think, though, looking at the data very briefly, we haven't seen a ton to indicate that this is a move driven by any particular exchange. And so those are just some of the dynamics to think about as you're looking at these asset transfers and these sort of sizable creations in the different markets.
Teddy, welcome back. Could you break down a little bit, though, this market's reaction to the infrastructure bill? Because it kind of doesn't make that much sense, right? I mean, this is a massive thing. Everybody's talking about how this is critical for the future of the industry. Not only does the market not seem to be paying that much attention, it's actually going up, in the midst of great regulatory uncertainty and regulatory uncertainty that at this point looks likely to not end up that well for the crypto industry. So what's going on?
I'm going to take the other side of that for a moment, Emily. I think that what we saw over the weekend, over the past 4 or 5 days, is an incredibly remarkable strength and power from the cryptocurrency community. We have tens of millions of cryptocurrency users who are envisioning a more positive, more resilient, more robust economic future. And they had their voice heard this week in DC, in the Senate, on social media.
Did they have their voices? Did they have their voices heard, though? Because ultimately, it looks like it's not. I mean, I get what you're saying in principle, but it's not actually looks likely to change the effect of the bill.
We may not have the result that we want right now, but we absolutely had our voice heard. And I think that's the important thing to note here. There's an incredible amount of power in the vibrant ecosystem that is developed around cryptocurrency online and also in DC. I think it's still uncertain, as we heard from Nick at the top. It doesn't look great for what at least the short-term results are going to be of the effect of this lobbying effort. But I think that it's really difficult. Actually, it's impossible to ignore that the cryptocurrency community now has a voice. There's a lot to be worked out in terms of how the bill will actually impact the market. As we talked about earlier, there are a number of things that need to be clarified. But in terms of actually having a voice, of actually being an industry that has a seat at the table, it's hard to say that the community doesn't have that now. And I think that's a big part of this.
So, Teddy, getting back to price action, we're seeing this short rally now that's happened in recent days. Do you think this is sustainable, or is this kind of like a head fake and we head down further lower from here, or at least lower from after going up a little bit more?
Sustainability, always hard to predict. As I mentioned earlier, it was on a weekend, so we did have a move that was on light volumes, something worth keeping an eye on. What we've tended to see, of course, is that after we have strong rallies in Bitcoin, that tends to spill over until the alternative coins. Ethereum first, usually, which has also rallied strongly over the weekend, and then coins on down from there. Part of this is why we actually have some new funds at Bitwise that we unveiled last week, the Bitwise Uniswap Fund and the Bitwise Aave Fund. That's a market-driven thing where our clients want to have exposure to these assets. They're aware of these trends. They see them. They want a way to be able to get exposed to the coins that come after a move that you have in Bitcoin, in addition to participating in it. And so I would say we need to see if there's confirmation on this move, see if it sort of stops out at the 50,000 level or if it keeps going. And then if so, we have a little bit of confirmation and you may want to start looking into these other assets.
Teddy, real quick,
Teddy, congratulations
how much of the sorry, just real quick, I just want to ask you quickly about the hard fork. How much of this recent surge do you think is due to the hard fork of Ethereum, and how much do you think Bitcoin is following that?
I think Bitcoin is leading here, even though we did see the move last week in Ethereum, and there's been a lot of positive uptake in the community. It's hard for me to tell how much of the London hard fork is actually understood sort of outside of the core group of experts and enthusiasts. We're really excited about the upgrade on the Ethereum network at Bitwise. We know the Ethereum community is really excited about it. It's unclear to us how much of that kind of spills over into the broader community that's driving these moves.
All right, Teddy, thanks for your insights and congratulations on the new crypto funds in the DeFi world. That was Bitwise President Teddy Fusaro. Time now to check in with Crypto Twitter with our tweet of the day. This one from Jake Sherman, founder of Punchbowl News, tweeting, quick thought before this Senate vote series. Crypto is only going to become more scrutinized by Congress. This is the beginning. Congress is late to it, no doubt, but this will be a bigger focus in the future. Leave you with that thought there. That's it for First Mover. Thank you, Emily Parker and Lawrence Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. with all about Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.